Good morning, everybody. Happy Thursday, June 20th. My name is Jim Codney, National Sales Director here with Western Marketing. Really excited for the call today. We've got not only a great carrier partner and a great product, but really a need that we're seeing even grow as I work with agents for income riders on annuities. So we'll get more into that in just a moment. Before we start, we are here for you. I know some of you do annuities day in, day out, won't have questions. I know a few of you on the call don't do annuities much or at all. So if you have questions, just know we are here for you and ask those questions. We'll do our best if there are questions to answer them at the end of the call. If we don't answer your question at the end of the call, it is because it's something that's probably better handled on a one-on-one basis. So either myself or somebody from our team here at Western Marketing will reach out to you after the webinar. With that, we're really excited to welcome our guests, our friends from EquiTrust. So we've got today on the webinar, we've got Leon Fitch, who is our day-to-day guy. So Leon and I have not only become partners in crime, but good friends as we work together. And we've also got Andrew Gabriel, who is the internal there at EquiTrust. And Andrew is able to help with a lot of stuff, especially as Leon travels and has meetings like this. So without further ado, I'd like to welcome Leon and Andrew on the call. Welcome, guys.
Hey, thanks, Jim. Appreciate it. And as always, looking forward to spending a little time with you and your partners. You touched on a couple of things, and I think if you've done business with EquiTrust over the last several years, we really haven't been overly competitive on the payout portion of, from an income rider perspective. But I think this move that we made in March is really a realization and almost an admission that, hey, if you're not in this space, are you truly servicing your partners and partnerships? Because this is something that's going to, with what we know, is this massive transfer of wealth and just, hey, how do we generate, guaranteed lifetime income? Because there are so few real opportunities for the consumer to do that today, that it was important for us to play in this space and offer competitive options. And quite frankly, I think in a lot of areas we're superior. Our income rider is superior, not because of the changes we've made, because the only real change we made was in the payout structure and getting competitive there. But some of the side benefits or bells and whistles, like spousal income and our enhancement feature and how we handle fees, and we'll get into all this in a little more detail. We're always, I think, differentiators against a lot of carrier products, against a lot of other carrier products. But so this has been exciting. I might give you some little inside baseball as I go through this with how this has played out from a product perspective and just from a sales perspective with us. But before I do that, I try not to assume that everybody on the call knows or has done business with EquiTrust. So I usually have a little slide that just goes, hey, why EquiTrust? But I've gotten to the point where I can kind of talk through that. We really pride ourselves in two areas, okay? Service and product simplicity. I honestly think those two things go hand in hand. You've probably never had a carrier partner get on here and go, service, we're okay at it, right? I think we all, to some degree, believe that we're good at service. I can tell you, we take a very transparent approach to our service. We post our new business processing times on our agent website, so where we stand every Monday. You can go out there and say, hey, if I submit a piece of business today, what's the likelihood that that's going to be processed here in the next few days? We've invested nearly 60% of additional resources. So when I say that, I mean we've hired 60% additional folks into our new business and policy administration and back office teams in the last 18 months. Like everyone, we've grown in order to sustain that and sustain service standards and maintain the expectations that our partners have with us. We've had to do that. So we've invested in doing that. And then from a product perspective, our products have everything that you would need to provide the tools and resources for your clients, but we really try to make them simple and understandable so they're digestible for the client, digestible for the advisor and agent as well. If you're like me and you don't, it's too complex, you know, you're going to have a hard time selling it. And if you're not comfortable talking about it, you're either not going to talk about it, or when you do, it's not going to come across as confident. And we know confidence in sales is very important. And then in that case, you know, typically you're not going to, the client is not going to buy, right? And that's really what we want to create. So if we can create an environment where you understand our products, they provide what the client needs, and back that up with a strong commitment to service, we think that's the basis for a great partnership. And that's how we go to market. A couple other, you know, tidbits. We've, you know, recently got upgraded to A- with Fitch. We think that we're trending in that direction with some other rating organizations. More to come on that, but you know, I think that speaks to our financial strength. You can compare us, you know, whatever ratio you want to look at, whether it's solvency or our capital, and we are, you know, well above in a lot of areas this other A and A- rated companies. So we think we've earned it. We're hoping to get that, you know, through a couple other reputable rating agencies, but you can, you know, along with the service, product simplicity piece, you know, we think that we're a pretty darn good bet right now for you and your clients from just a safety perspective and feeling comfortable doing business with it. So it's been a fun year. It really has here at EquiTrust. Yeah, I feel like the only thing that makes my job difficult is if I have nothing to talk about or nothing new. And we've had lots of stuff to talk about, whether it's premium bonuses or, you know, new product launches or the IBR upgrade or you know, our you know, the first trip we've done, you know, to Turks and Caicos, and you know, supporting that. Just the overall growth on our internal sales teams, our marketing teams going from 2 to north of 12 people now in the last 18 months, and what that's been able to provide for us in the field. It's been a lot of fun. I really, again, I think sometimes we use fun. It's been fun as kind of a cliche. I've had a blast, and it's I think we're just getting started. So I love opportunities like this. So let's get into our income benefit riders. This took effect in March. This isn't a long or complex presentation, but I think it's impactful and powerful. And we have marketing resources for almost every slide you're going to see in this. So if you're like, hey, boy, I'd really like to show that to a client, that would be helpful. We probably have a one-pager for you with that, and I'll make sure, Jim, I get those, the ones that are most common, over to you. So if you want to distribute those, you can. So let's go ahead and jump into it. So on the agenda, as you might expect, right, you know, we're going to do a little brief introduction, what the roll-up design is, you know, just an overview. The heat map, this tool, I think, is really a really cool tool. You know, you can use various aggregators to see where, you know, we land or other carriers land competitively, but it is nice to know specific to a carrier, if you're doing a lot of business with them, hey, somebody wants early income, late income, you know, but what's you know, maybe I don't need to go run that. I have a resource from the company. We've got that. So I'll share that with you, how we compare versus the industry in a few key areas, the spousal income options, chronic illness doubler, the competitive fee structure, and then the resources. I'll talk about that at the end as well, because it's, you know, it's always nice to know that you can go find some of this stuff if you need it. So yeah, so we made the income rider upgrades to the Market Power, Market 10, Market Value, and Market 7. Today we're going to focus on the Market Power, Market 10, and the Market 7. I talk about those in a little different manner depending on what you're looking for, but you know, ultimately, you know, if you're running a competitive analysis on where those products fit, depending on the time frame you want to take income, we're right at the top. Okay, and I think especially with the Market 10 and Market Power, you've got very if you're a baseball person, I call the Market 10 like a 5-tool player, right? If you know baseball, it means they can hit for power, they're fast, they can play defense, they can run, you know, they can do it all, right? And I really think that's what that product is. And I'll talk a little bit more in detail about that when we get to it. So roll-up designs, you guys all know, if you play in the income space at all, some carriers offer a simple roll-up, but with our IBR, the benefit base is equal to all premiums and bonuses, less withdrawals, and we compound that, you know, for whatever the length of the contract is, 7 or 10 years. And you know, this is a pretty obvious statement, but the faster the benefit base accumulates, the greater the income. And you'll see that on the market 7, because we've got currently got a 25% benefit-based bonus. So boy, that thing makes that income side of that really sing early, in the life of that contract. And something that I know that all carriers don't do that. Our payout factors increase annually starting at age 50. So depending which contract it is, whether it's 4.5 or 5% is the payout factor, you don't have to wait 5 years to get that bump, to 5%. It'll go up 10 basis points per year every year. So you're not trying to play that. Well, I got to wait that 5th year to get that full amount of that payoff factor. It's gradually increasing every year. I think that's a powerful differentiator for us. I know some other carriers do it, but not all. So here's kind of the advertisement. I told you the 3 that we upgraded are which we're focusing on is the Market Power, the Market 10, and the Market 7. Market Power and Market 10 are bonus products anyway. They're currently we currently have a bonus premium or a bonus on the bonus, right? So normally that's 10%. We're giving an additional 2% now on both of those. So that really helps jumpstart the accumulation side, of course. So when I said that these are, like I use the term 5-tool player with Market 10, you've got a product here that can really jumpstart you on the accumulation side. If you've got some business that you're looking to replace, we can make a case here from a suitability perspective, because with a 10, let's say if we use the Market 10, you've got an 8% premium bonus. You got we could use the fixed account right at 3.5%. So we got 11.5% year 1 yield. Our threshold, at least on the accumulation value side, is we got to show net tangible gain, right, for the client after year 1. So it's a good tool to if you got some folks and we all do, right, have some folks in some contracts that aren't performing, with what the market has done over the last couple of years. So that's one tool. But then you look at the roll up and rate design on the income side, 8%, on the power, and on the 10, great income in the later years. We'll talk about the fees and how we look at that differently. You'll see fee as a percentage of AV, account value, not benefit based. That's a big differentiator. And then the Market 7, 25% benefit based bonus, 7% roll up for 7 years. It's an awesome product right now. If you're looking at an annuity rate watch or whatever tool aggregator you use, we're right at the top, if not at the top in most of those. So several awesome options here, and I believe a solution for your client regardless of what's important to them or what they're looking for. Here's the heat map I talked about. I'm going to show you 3 of these. They're all the same, but it does show you the difference if you issue at age 60, at age 65, at age 70. So like I had mentioned, and again, I think these are just nice one-pagers to have on your desk somewhere, have saved to your desktop on your computer. You can see down here, the color coding, right? Hey, so the Market 7, like I said, this thing sings early. Okay, I mean, this is very, very competitive. You look at somebody after year 1, basing this on a $100,000 premium at age 60, and you can kind of see what that looks like, right, from an early income perspective. But what about a little later, Leon? Well, the Market 10 looks incredibly competitive after we get outside of year 7, 8, 9. That's a really nice number from a guaranteed lifetime income perspective. And then you can see what that looks like as they get a little older, right? It looks better. No secret there, because the benefit base continues to grow. Well, then the benefit of the guaranteed annual income or lifetime income grows as well. At age 70, you're down here at age 70. Someone's got a contract that they're into year 7 or 8. They've got 16 grand of guaranteed income coming in to them on an annual basis. That's with a $100,000 premium, the client can do that math pretty quickly to go, hey, is this going to work out for me? And also, do I have protection for my spouse? And we'll talk about our spousal income rider here in a little bit. So versus the industry, we don't typically use names, but these are reputable carriers that are in the income space. I always make the point here, guys. So this is a 65-year-old $100,000 in premium, and we've run that as waiting 1 year, right? So, you know, at the end of 1 year, you know, the market 7 is well outpacing other reputable carriers. But then you look at the market 10 and market power. Why would those be options, and why might they be better than even competitor A, even though the income payout is better? Well, you know, we're still accumulating, right? In that contract, there are other things like the return of premium feature that's in the market 10 that's at no cost to the client. You know, so again, you've got, and plus the market 10 being a flexible premium product, that's a 5-year, you can deposit funds into that product for 5 years, okay, and continue to grow both on the accumulation and on the income side. So, you know, while it may actually be in third, I could make an argument from a product flexibility and the tools and resources that it provides, the options, right, more than anything to the client, that is, you know, maybe a better option, even though the payout is slightly less. Because of the other options that it provides the client. So we feel really good about that. So get a little later, right? 5 years, and man, now look at the market 7, and boy, the market 10 is bumped up. That, you know, quite honestly, the market 7 is our hottest product right now. The market 10 is my favorite product because of all the things I've said. But that's a really nice payout on a $100,000 contract. And then at 10 years, you know, the market 10 and market power now have jumped up, you know, ahead, you know, of everybody in, you know, in comparison to what, you know, what it does in early income. So if you looking for late income, you know, the market 10, market power are great options. You look for somebody in early income, right? Market 7 is the ticket. And again, that market 7's got a 25% premium base bonus now. So let's talk, you know, I don't know the best way to, these are add-ons or additional features, right, to our income rider. You know, so a lot of carriers handle this differently. This has been an advantage, I believe, for EquiTrust against many carriers. We just, again, we're not overly competitive on the payout phase. So upon the death of the first spouse, if their single life payout is elected, okay, the income payment amount is recalculated based on the remaining value of the IBR benefit base and paid out for the life of the surviving spouse. So you guys know that's a really nice thing to be able to say that, hey, you know, if you know the husband dies or the wife dies, that hey, you're still going to have some lifetime income here, even if the accumulation value hits 0. That's really cool, very powerful. So recalculates the payments to continue even if the accumulation value hits 0. So some protection against the impact of the market and you know, renewal rates and things like that on the accumulation side. We're not going to run that thing out. They're still going to have, you know, some lifetime income. So that's a really nice feature. Couple of notes, and I always say, you know, you put this stuff down here in fine print. There are a couple of things just to make sure we understand there, that the spousal continuation may not be elected if the single life income withdrawals were elected and the accumulation value was 0 before the death of the spouse, right? So if it's already reached 0, then we can't continue, we can't do the spousal income. I think that's common sense, but I do like to call that out. And then the spousal income may not be elected if the surviving spouse is younger than 50. Our payouts start at 50. You know, so at the time of the owner's death, if they're under 50, the spousal continuation piece will start. So we put that in the fine print, but I like to call it out to be honest and transparent with how those things work and not to create confusion. I think those are pretty standard table stakes ways that those two situations are handled, but the way we handle the spousal continuation and recalculating it based on the surviving spouse, as long as they're over age 50 and there's money left in the accumulation side, to provide them a lifetime income, I think is a really nice feature and great talking point. This is a big deal here, the chronic illness doubler. A similar philosophy here, right? This applies when your client loses the ability to do 2 of 6 of the activities of daily living or experience permanent cognitive impairment. You know, another really key thing here is confinement is not required, so they do not have to be in a home. And the payment is then increased for up to 5 years. It doubles even if the accumulation value depletes to 0. Okay, so in a lot of cases, that payment will either go away or revert back to a single payment. So if in year two, because of the doubling of it, we're reducing the accumulation value dollar for dollar, and that goes down to zero, we'll continue to pay that doubler for 5 years. That's a big deal and a big difference. That's approved in all states except New York. Fee structure, right? Hey, you these days we're getting a lot of educated consumers. They want to know, hey, well, where's the money going, and how much does this cost me? Okay. And what's the difference between, way EquiTrust does it and the other options? We structured our fees in a manner that we take our fees out of the accumulation value as opposed to the benefit base. The obvious advantage there is that the accumulation value is typically lower than the benefit base, especially in a product like the Market 7, where we're applying a 25% bonus to that thing day one. Well, it would be almost disingenuous if we then the fee was based off of that, because now the fee is higher, right? So we just look at that, comparing it over a 10-year period, 2 different contracts. 100,000 initial premium, allocated at a 5% fixed rate. That's a little out of date, because we did just do a rate adjustment with a 1% annual fee, and you can see the difference. That may not seem like life-changing money, but hey, that's $3,000 over a 10-year period, and still it's a better way to do it, from a consumer perspective than the alternative. So we do like to talk about that, because that is an advantage. And then, okay, how do we, Leon, what are the resources you have? And if you guys are familiar with our agent portal, you can go on and click on the products, click on annuities, and there's a plethora of tools that you can download into PDF form, or you can order from the website. The agent product guides are, I think, an incredible tool to educate yourself on the bells and whistles. Hey, where is the payout structure? Where is the surrender charge schedule? All the things that you would need to have. Some of the things we talked about today. How does the spousal work? How does the doubler work? All those things are right in there. So I always encourage people, download, if you're selling a product, download the agent guide and have that handy, because these questions are going to come up. A lot of FAQ stuff in there as well. You can just click on it, and it'll be state specific FAQs. It'll be hey, how many, is this a flexible premium product? How do you handle X, Y, or Z? We've got a lot of quality FAQ stuff in there as well. Obviously the illustrations, income calculators, and all the pre-approved client ads and more. We are pretty strict on our from a compliance perspective. If you're going to send out anything about our product, it's got to be a pre-approved piece. I see agents and sometimes groups get their hands slapped for kind of getting creative on their own. Please don't do that. Run all that stuff through our compliance folks, and Jim and Western have always been really good partners about doing that, and they can help you and assist you in making sure that we're staying compliant on the marketing side. So look, ultimately, like I said, this is not a complex or new concept, but I do believe from an EquiTrust perspective, when you add this to the other portfolio, the portfolio of our, from an accumulation perspective, our fixed products, the sales, ideas and concepts we have with our partial tax conversion program. We've got Bridge as a true long-term care option. We're getting close to being what you want to be, right? A one-stop shop for a carrier with high levels of service, financially strong, that hey, we likely have a product that fits your client, that's appropriate for your client, and it's going to be understandable and, again, digestible, by the client, so they feel comfortable making that purchase. And then, as I just showed you, lots of resources to educate yourself and your client, on our product processes and just us as a company. So with that, Jim, I don't know if you've seen any questions, or you have anything to add, but I told you it'd be relatively short and sweet, and we're right at the end.
Yeah, Leon, thank you so much. One thing, as if you guys have some questions, go ahead and type them in the question box now. There's an epidemic that's starting now that I see every day, and I truly believe it's going to get worse in our country. And it's the fact that people either are unwilling or unable to save for retirement. And you know, if you look at the stats, when my kids are retired, there probably won't be Social Security, et cetera, et cetera. So couple that with longevity, meaning we're living longer. There's a true need to help people with not only saving for retirement, but for lifetime income in retirement. There's a big difference between helping somebody save some money, put it away for when they turn 65, and then the other alternative is giving them a guaranteed income for their life. And that, folks, especially once EquiTrust made their changes, is where they stand out. Is you got a client that in 2 years to 10 years is going to need to start lifetime income. I constantly, every day right now, see EquiTrust come at the top of the heap when we put it in an aggregator and figure out what the best company and products for your clients are. So, as you're looking at that and as you're talking to your clients about annuities, that's a key question to ask. What's most important? What's number one for them? Is it just accumulation or is it lifetime income? And not that EquiTrust, they do have a really good accumulation products as well, but for lifetime income right now, I assure you, they're coming at the top of the heap in almost every scenario I'm being hit with on a day-to-day basis. Did one yesterday for $1.2 million with one of my agents, and sent them market 7 because the client's looking for income after a year or two. So again, a really good opportunities to talk to your clients, talk about real things that could happen in their lives, etc. There's a question, Leon, and I think I can answer this, but about what a roll-up rate is. Folks, the roll-up rate is really the rate that the insurance company credits the income account. It's commonly called a roll-up rate, but all that is the interest rate that's credited to the income account. So as you're learning income annuities, that'll intertwine with interest rate on income account, for example. But when you look at income, there's 2 key factors, and it's not one or the other. Both have to be good. There's a roll-up rate and payout factors. You'll see a lot of companies market, X percent, maybe even a 10% roll-up rate, hoping that you'll market that to your client without really looking into it. But without the combination of the growth and the roll-up rate and the payout factor, which is the calculation used from the account to actually pay your clients, without the good combination of both, that company is not going to necessarily be competitive. So it doesn't take one or the other. In this market, it takes both. And so, again, EquiTrust has that right now after the changes they've made. A few months ago, honestly, folks, we wouldn't be having this discussion about EquiTrust. It would have been a different carrier, just to be very honest. But they figured it out, and they've got great products for you now. But if you have questions, what I'd ask you to do, I manage the day-to-day life and annuity team. My name again is Jim Codney. I'm National Sales Director, but you can ask for myself, Amanda, or Tyler Marr. There are 2 life and annuity marketers. Our number is 800-852-7152. Again, 800-852-7152. If you have questions, call us. We're happy to work on scenarios here for lifetime income and just prove to you what Leon said in this webinar. Other than that, folks, we're right at about 30 minutes. Just want to thank you for your time, investing that time in learning and hopefully expanding your knowledge and the potential to grow your business. So it's not lost on me that you're, instead of out at appointments, you're on a webinar learning from us. So hope it helps you. And with that, Leon, Andrew, thank you very much for your friendship and partnership. And everybody, have a great day. Take care.
Thanks, guys. Appreciate it.